Before we dive in, quick shout out to the BDO Retreat. If you're a top producing SBA lender looking to level up your game, connect with like-minded pros, and walk away with fresh strategies that you can actually use, this event is for you. We're talking workshops led by some of the greatest BDOs to ever do it, exclusive networking, and a chance to recharge your batteries after another year of grinding it out. It's happening January 16th and 17th in Key Largo, Florida, and spots are limited. We only have 20 seats. Go to artofsba.com to learn more and reserve your spot today. Now on with the show.
Locking myself in a room with lenders, underwriters, credit officers, closers, and a bunch of engineers.
Just like when you were applying for the MBA.
Right. It's honestly a disaster. If you are a small business in the US looking for funding right now.
We do not want disruption. We want to just do the things we have always done and then retire in 5 years.
I don't think about myself disrupting SBA lending. I think of myself disrupting predatory online lenders by giving the weapons of modern technology to the SBA lenders to fight back.
In 2020, the banking industry was forced to accelerate into the future, and now there's more innovation than ever before. And many of my colleagues are embracing these tools, and they're winning. But the banks that are slow to adapt, well, frankly, I'm concerned. Here's an example. Bank A uses Lumos and has over 1 billion data points at their fingertips that allow them to, within seconds, access all this data. Local economic data, industry insights, even a predicted expected loss. And Bank B, well, their underwriter spends hours Googling it. Which bank do you think is going to be winning 5 years from now? Guys, we can finally make credit decisions using actual data. Let Lumos take your small business lending to the next level with cutting-edge analytics by going to lumosdata.com and scheduling your demo today.
So we met at a conference maybe a year ago or something like that. Didn't know you at all. It's like, who's this German guy here at Nagel? And I was like, yeah, you're to me one of all of these other vendors that are trying to sell something. And you're like, all right, yeah, I'll look at a demo. Okay, I got to go. Then we caught up. And then, we've been looking for LOS for a couple months now. So I've been looking at all the demos and stuff like that. And it's like, fine. Yours blew me away.
I appreciate hearing that.
I was getting goosebumps. I was like, I started acting like not myself. I was like saying weird things. I was like, I didn't know what to do with my hands. So you built something really cool. So let's tell that story. Let's start from the top. How did you get to the point where you started building Casca?
So I started my MBA at Stanford, and I specifically chose Stanford because it allows you to do a bunch of computer science alongside your MBA. You essentially have an all-you-can-study policy, and you can take as many classes as you want at the engineering school, for example, which is what I did. So I did my business classes during the day, and at night I was sitting in the basement of the engineering center, first doing basic computer science, and then later diving deep into machine learning research, natural language processing, natural language understanding, and really the background behind large language models that now are transforming the way consumer technology works with things like ChatGPT. And I remember vividly sitting in a classroom with 60 AI PhDs, brilliant minds, and looking at this novel technology. This was months before ChatGPT blew the world away. And I realized, wait, all of this is going to automate probably 90% of the manual, tedious work that people were doing on top of the software that I used to sell in core banking software. And I asked myself why it wasn't happening. And I realized as I looked around the room at the 60 AI PhDs, I realized none of them had even heard about what a core banking system is. None of them had ever heard about a loan origination system. And frankly, none of them cared about it. They cared about writing the next research paper and researching the quantization of models and federated learning, which are very cool things. Like, to be clear, someone should be researching that. But I realized that if no one takes this technology out of the classroom, out of academia, out of research, and brings it into the real world, it wouldn't have a big impact. And then I looked at the folks that I used to work with previously in kind of the legacy banking software world. And I realized that one, they weren't in the room. They weren't seeing what I was seeing in terms of the technological breakthroughs. Secondly, they were sitting on these massive stacks of 30-year-old legacy software that needed to be maintained, often written in programming languages that are no longer maintainable, hosted on mainframe servers in the basement. So they were stuck in a legacy world that was not at all prepared for this technology. So I, in that moment, realized that I might literally be the only person in the world in that moment that realizes the potential of AI to solve problems in this banking sector. And so I embarked on a journey to bring AI out of the classroom into the banking sector. And after talking to hundreds and hundreds of people that I used to work with, banking CEOs, CTOs, heads of lending, loan officers, credit officers, I narrowed it down to a couple of key problems that I would want to start with. And I landed in small business lending, particularly because that is where the problems were the biggest. Like, consumer technology has gotten a lot of love from technology over the last 20 years. It's really easy for you and me to go online and get a loan for something personal, sign up for a credit card. We can go to a car dealership and get our car financed on a loan before we even leave the lot with our car. It's a lot more solved for, while on the small business side, it's honestly a disaster. If you are a small business in the US looking for funding right now, you have two bad options. You either go to a community bank, a credit union, which will offer you the best options. The most trusted lenders will offer you the best terms, the lowest interest rates, but it's just going to take forever. The average time to close an SBA loan right now is between 60 and 90 days. And most small businesses don't have that time. If you're running a bakery and your commercial oven breaks today, you won't be able to open the shop on Monday unless you get the $25,000 to repair or replace the oven. Now, a 90-day timeline, you might not have that much cash in the bank to even bankroll your existing operations until then. You might go out of business before that loan closes. So that's a bad option. And not to even speak about the complexities of getting that loan closed with a community bank that might not even offer you the ability to apply online, because that part of the banking sector just hasn't gotten the law from the technology side. And then the alternative is to go to one of the many predatory online lenders that will give you the money really, really quickly and then act like a digital loan shark. And they'll give you a merchant cash advance with APRs somewhere between 25 and 45%. I now regularly see small businesses with MCAs on their balance sheet at interest rates that are above 100% APR. And when we realized that, we thought to ourselves, how is this shit even legal? Sorry, I don't know whether we're allowed to curse on the podcast.
I can always bleep it.
You can bleep that out. But I thought it's not ethical, it's not right. And it triggered something deeply emotional in me to use my education that I feel like I was gifted by the world. I was at Stanford on a scholarship, and I feel like with that comes a responsibility to give something back to the world. So I wanted to use that education for something good, and this seemed like a societal problem to solve.
And I feel like it is. Like, I truly feel like that's the case, because a lot of people don't want to solve that problem because it's really hard to solve.
It is really hard.
And there's just not as big of a TAM as auto loans or credit cards. It's a more niche market.
I think that is a misconception. Small businesses employ more than 60% of the American workforce. Small businesses are what keeps the economy running. Small businesses are what makes the American dream possible, what makes it possible for someone who grew up in humble beginnings to strive for something bigger and to do a big, meaningful impact in their community by employing others and by serving their community. It is the economic engine of everything around us. And that is a big TAM. That's 30 million businesses, the majority of which are small businesses. And that is trillions in total loan volume, maybe not all of it in SBA loan volume. Part of the reason for that might actually be that SBA lending is so damn hard. And it's so hard to close an SBA loan.
It's crazy.
And if it was a lot easier, maybe that market would actually be significantly larger, because there are lots of small businesses that meet the spirit of what the SBA program is trying to do
that could be right,
to enable that American dream.
That could be true. I like that you're
promote
thinking
economic growth.
I like that you're thinking outside the box and reframing the conversation, all like that. That's the type of stuff we need we're reluctant. We don't really want change, but we know we need it. It's like you're giving us the medicine we need.
What do you want?
Well, we want technology that works.
Yeah.
And you know, you've been at this now. What's it been, like a couple of years? So how's this work? How did you start building it? How did it all unfold?
It started with a community bank out of Connecticut, where the chief innovation officer was a former serial entrepreneur that looked at all of the lending software just like you looked at it just now and was like, this is all kind of fine. Swipe, next. And he didn't find what he was looking for. And then he met me and my co-founder Isaiah, and he looked at us. And as a former serial entrepreneur, he was like, wait, these guys are a little like me. And we were there and had a long list of problems we wanted to solve. And he pointed us at one and said, this is the one that I would love to solve. And maybe we can do it together. And so we partnered to build a next generation loan origination system, which we wanted to use for primarily SBA lending and small business lending. And we did that over the first couple of months. After 8 weeks or so, we had an initial online application form that looked beautiful on like a desktop and on a mobile phone, so people could start an initial inquiry. And then a client-facing portal where people could upload all of the documents into a checklist of things that previously were being handled manually over email back and forth. And a little like AI agent that would draft follow-up messages to kind of follow up with clients at any point in the process and tell them here are the next steps, here are the things that we're still missing, and answer simple questions that people might have as they were going through it. That's what we did in 8 weeks.
How long would that have taken 5 years ago? Before we get into the episode, I want to tell you a quick story. I was at the BDO retreat earlier this year, sitting next to Dustin Baker and one of the Shatterbox learners that he had recruited into the SBA industry. Her name is Sarah. And Sarah told me that she closed $10 million in her first 6 months as a BDO. I look over at Dustin and I asked him, why would anyone hire an $8 to $12 million producer anymore? Sarah is one of many Shatterbox learners who has proven that you can take a smart young person with no SBA experience, teach them SBA, and in many cases, they will outproduce seasoned BDOs right out of the gate. Why are we so willing to hire a mediocre BDO with a 6-figure salary when you can hire your next rock star, someone with unlimited potential, for half the price? You have no more excuse. Shatterbox has created the best learning platform ever created for the SBA lending industry. Join the 20 plus Shatterbox clients who have already taken the plunge on building talent from the ground up. I'm going to leave a link down below just for Art of SBA listeners. So if you want to learn how Shatterbox can help you hire and invest in bright young talent without breaking the bank, reach out and set up a discovery call today.
Probably a year, 2 years or so. Like the world has changed. So maybe part of this AI revolution is also it enables us to build software much faster. I actually started my career once upon a time building a lending platform with a kind of 40 billion assets under management German bank. And if I remember correctly, we had an absurdly large budget for it. And over 5 years, I'm not sure they ever finished. It was like a massive undertaking. Very few people have even dared to attempt building a loan origination system themselves. And now in 8 weeks, you can build at least the initial portions of what the client experience could look like.
You can vibe code now.
You can vibe code yourself an application form. You got to understand what you're coding though, and you got to make sure that what you're doing is safe because just like you said, people want software that works and sometimes vibe coded software doesn't work. But we very quickly built an initial application journey and the results of that were overwhelming. Like immediately the number of people who completed a full loan application jumped like crazy from an initial number of like 8% or so of applicants to more than 80% of people submitting the entire application. And we thought that was a major success. And then we talked to the underwriters who thought that we were trying to mess them up because they were used to looking at a couple of loan files a week. And now suddenly they had a backlog of 30, 40 loan files that they couldn't get to.
I mean, solving that bottleneck alone is invaluable. Double click on that for me for a second. What are the things that you've kind of put into place in your software that gets applicants to fill stuff out faster?
So first of all, many banks don't even have a way to apply online, which is a gap. And it's 2025. Like we can do everything online. We should be able to do that online. For many banks right now, it is a simple inquiry. And then maybe a couple days later, someone reaches out to you via email or gives you a phone call And then every interaction with the bank is a 1 or 2 day lag time because it happens over email. While if you have a continuous digital experience, I, as the applicant, can do it completely on my time. I can decide to start my loan application Friday night, 10:30 p.m. after I closed up the shop and brought my kids to bed, which, funnily enough, 63% of applications, we now see this in the data, actually start on nights and weekends, with Friday night, 10:30 p.m. being the peak hour every week.
Amazing.
So that's a big change, just allowing people to do it on their own terms. Then you can optimize that experience and make a lot of the things that in SBA lending are really, really complicated much easier. So like for all of the SBA lenders under us, have you had the conversation with an applicant about how to fill out the Form 413, the personal financial statement? It is a massive pain. Maybe you can send them one of Ray's videos where he explains on how to fill that out. But
that one went viral too.
It is
5,000 views.
You went viral with that one, see? Because there's a real problem here, because that form is hard to fill out. And it's confusing. It asks for a lot of redundant information that you already know about the customer. It doesn't do any of the calculations for the customer. And it introduces a lot of human error, potential for error, because if anything's wrong there, it's never right. Then you have to do it again. And you have to do it again and again as you find more and more errors. And each individual iteration adds like 2 or 3 days onto the overall loan cycle. It's the back and forth
is what is causing the loans to take forever.
Exactly. And if you don't have to go back and forth, because the customer can, instead of seeing this like ancient PDF document that looks like I'm filing my taxes manually with the IRS, which nobody would ever do. People would use QuickBooks, right? Or TurboTax, right? Instead of seeing that ancient document, you just fill out a beautiful online form that does all the calculations for you. And now if we take a deeper look at what is actually in the PFS, we're looking for the personal debt of the business owner or guarantor. We can pull their credit report, and I don't even have to ask them for what the balance on their mortgage is. I can just tell them this is the balance on your mortgage, and they can just say yes, and boom, I just saved them 10 minutes of finding their latest statement and entering the numbers into that fillable PDF. And every single time someone types, that's a potential for error, and we would have to correct that afterwards.
So you're pulling credit and feeding that information into the PFS directly.
You can do that.
Cut out the middle.
Cut out the entire potential for manual error, because all I do is I ask the person to confirm it, and then in the end, I can still generate exactly the same Form 413 and ask them to sign it.
That's like 10 minutes there.
Yeah.
By just automating a little bit,
and it's a day or two of back and forth in order to coordinate with them, to get on the phone, to explain, and then when they submit the wrong thing, to do it again, right? But there are 150 of these tasks in closing an SBA loan. Same happens with the 1919. The same happens with every single form.
And you've tried to do a solve for all of these things? So
one after the other. That is the last 1.5 years of my life.
Okay, that's what I want to get into.
1.5 years of my life has been locking myself in a room with lenders, underwriters, credit officers, closers, and a bunch of engineers.
Just like when you were applying for the MBA.
Right. It's the same thing. It is.
You do a deep dive.
You do a deep dive.
Do you think that's sort of the secret of why this is like working so well? Is like your approach to going all in as a CEO?
Oh, interesting. I think it's two things, right? It is having the discipline and the diligence to go deep and work hard. And the other part is the mission behind it, because the folks that joined our team at Casca are incredibly talented. Many of them had offers to join the top AI companies like Anthropic, right? They had offers to join the top tech companies like Google or Apple. And for the most talented people, they can do anything with their life. They have all open doors. And to convince them to say this is the thing that we should spend the next decades of our life doing, you have to have a clear mission. And for us, that is to help small businesses all throughout America get access to affordable funding. And if we can cut out one task after another until you can close an SBA loan, not in 19, not in 60, not in 30, but in 3 days, that would have a transformative impact on the future of small businesses in America. And that's something meaningful. And every top engineer has a family member that runs a small business or is employed by a small business. My co-founder, like at the very start of this, said a sentence that I won't forget. It's, the small business, working in the small business of his mom taught him about life. And he was raised by a single mom on the income from her running her small business. And it's the ethos of doing something for the world around you that then motivates you to go as deep as it takes to build good software, whether that's sitting down with an underwriter again and again and understand the nuances of how underwriting a chicken farm is different from underwriting a dental practice. And you have to understand that in order to build good spreading software, or whether that's spending 10 hours, 20 hours, 30 hours reading regulation, reading the SOP and every procedural notice that comes out, because only then can you build good software for it.
You just gave yourself away with the chicken farm comment. I want to go in so many different directions here, but you said something about how you spoke to like 100 or hundreds of people before you even embarked on this journey. Is that true? Like, what does that look like? Are you just reaching out to people saying, hey, I want to pick your brain. I have this idea and I just want to, that sounds exhausting.
I find it exciting because I get to like walk a mile in someone else's shoes and get to learn a little bit about their life. But it's two approaches, and they are very much the two co-founders of this company. One is my approach. I know a bunch of bank CEOs and I just call them up and say, can you talk to me for half an hour about what your top priorities are? And then at the end, I ask, can you connect me with the person who runs your lending department? And then I have a conversation with them. And that gets me kind of the bird's eye perspective on what are the big problems that could actually have a transformative impact for a large bank, a mid-sized bank, a small bank. What could actually move the needle? What could double revenue? And then on the other side, we've got my co-founder's approach, who after sitting in on like 3 or 4 of these meetings, he said, yeah, this is all fun. He's an engineer and he wants to hear everything from first principles. And he's like, this is all fun. You managers talking about manager stuff. And he put on his kind of Stanford undergrad t-shirt, and he just walked into every single bank branch in San Francisco and just asked them whether they have 15 minutes to chat with him about lending. And eventually he found himself sitting inside of a credit union, and they were like explaining to him all of their problems in a typical day. And he would start these journals of here's what a credit officer does in a typical day, broken out in 15-minute increments. And he would have these drawings of all of the problems and then the ideas. And then the next day after he came back and he was so energized, it's like, okay, I'll come with you. Let's do one of these together. And increasingly it turned into us showing up to the same people again and us saying, wait, we like last week, you remember us? We were the weird people that walked in and asked whether you have any problems that we could solve with software. And we just show them prototypes, the initial mock-ups of Casca, the initial ideas of, okay, can we like take the data off of a tax return and automatically create financial ratios like a DSCR? And it's like we should build a little mock-up prototype of it and showed it to them. And sometimes people would say, wow, that's interesting, which is a no. Or that's kind of cool, which is also a no. And sometimes people would say, wait, can I use this right now? Like, can you give this to me? And then you knew that you were on the right track.
That's incredible, man. You guys sound like you're super sharp. I'm glad you're kind of coming into this industry because we really could use the help, and just amazing. I mean, there's even the managers of the underwriters don't even do that to say, how can we do this better? You know what I mean? Like, that's so smart. To just sit there and watch what people are doing. Like, you don't know what's going on until you're sitting there watching.
Right. You can't know.
That seems like a novel idea to me because I've just never seen that before, but it's probably what a lot of smart people do.
It is what my co-founder like brought us to do, because he was new to the banking industry while I already had a bunch of like preformed patterns about how everything
right
or had always worked. He just broke all of them, and he would ask me questions for like 4 hours on end, and eventually I wouldn't have the answers anymore, and he would be dissatisfied and just go out and try to figure out how it could be done differently.
It's the preconceived notion. You just think, it's like one time I did that to myself. I wrote in 15-minute increments how I spent my time, because you think you know how you're spending your time, and I thought I knew how I was spending my time, but after the end of the week I looked at it and I was like, oh, that's not what I thought it was.
And it might not be what you want to spend your time on.
Right.
Like,
exactly.
If we take the example of the underwriter, and I do find a lot of very competent underwriting managers, many of them had just given up on the potential of technology having a significant impact for them because all of the existing tools for underwriting were kind of bad.
Right.
But I do see this exercise of going in, what are people spending their time on, and do we want to spend our time on, lead to transformative results because many underwriters spend a large part of their day typing stuff from a PDF into an Excel file and then from an Excel file into some legacy loan origination system. And that is what makes people churn out of the job, because that is a pretty frustrating way to spend your day. That is not particularly interesting. The interesting part of the job happens like in the fringes of the manual repetitive work. But you want to do that with your entire day. You want to be a financial detective. You want to be someone that has the time to dive into why did revenues drop during that period of that last year? And is that a repeatable pattern? Is that a problem that I should be worried about? What did this one-time expense mean? You want to spend your time trying to understand whether this business is financially sound or whether a business that is in trouble because of bad management can be turned around after an acquisition. You want to spend your time thinking about the future, thinking entrepreneurially. You don't want to spend your time trying to make sure that you exactly perfectly copied the numbers off of a PDF. That's just frustrating.
It's crazy that no one's even questioning that until... now you are, right? So it's like an underwriter is spending half their job as a modern day factory worker putting together widgets.
Right.
And there's
you hire the smartest people for it, right? With a great financial education. They get paid very well.
To do data input.
And they don't want to do it.
No.
Like no one wants to do it. It's just that the alternatives that they had been given thus far were all even more frustrating to work with. Some old software that would force you into exactly this format of how a P&L is supposed to look like, and you're like, that's not how I want to underwrite my deals. And so you had to go back to Excel and you had to do it all over again.
You're exactly right. So like we talked about the auto spreads came up a lot at the conference I was just at. I can't say too much because we were sworn to secrecy, but like one of my friends who founded one early on, people know that one now, and then some of the LOSs have this OCR?
OCR, yeah.
Okay. So, it takes the tax returns, pulls the numbers, spreads it out and stuff like that. And then, I think like you were alluding to, the credit managers say, but it doesn't work.
Yeah.
Or it doesn't work with the interims, or it doesn't work if the tax return's scanned in a funky way. And so I want you to look into the camera and answer me on this one. Answer the people. Does your OCR technology work?
Yeah, and it's primarily not my achievement. It does work, but it works because the underlying technology has improved over the last decade.
So the ones that aren't working are built on the old stuff.
It's just old technology. Like in the beginnings, OCR is hard, right? Recognizing what is on the page is hard.
Right.
It was easier to do for very structured documents. So that's why tax returns were possible first. Right. Because in a tax return, the sales are always in the same position. It's like exactly this little box where they will sit. And then all I need to solve for is, can I read numbers? And it will always be called the same way afterwards when I import the number that I dragged off of the document. In a management prepared P&L, that's not the case. They are management prepared. There are no clear guidelines on how you're supposed to call it. You can call it revenue, you can call it sales, you can call it turnover, and there are many different ways in which you can break it down. And that complexity of like unstructured data, there was no technology to handle this. This is what large language models brought to the world. I didn't build those models. I'm just realizing after sitting in the classroom at Stanford working with these models that I can use this to solve a decades-old problem in spreading. And I think that is the overall exercise that we together need to do as a sector, is to look at the rapidly changing technology landscape and ask ourselves which things were not possible 5 years ago because the technology did not exist that we can now make possible. And so now we can read that. Also the OCR, just the pure recognition of what's on the page has gotten so much better. Like I can now read rent roll documents that were written in handwriting by a landlord manually logging the rent.
What I tell you guys, I told you this guy was the real deal.
That stuff was not possible, but it's possible now.
We should do a live demo one day.
We should.
Get everyone on there and be like, hey, this is it. Moment of truth. Drag the documents over. Let's see, is it going to work? No, that's awesome, man. So listen, year and a half in, 2 years in, whatever. You look back at that first part of the journey before you even took that first step. You're like, you have the idea, you're bought into the idea. What would today Lukas tell that person
um, so this is funny. I would probably tell the Lukas that was told SBA lending is going to be fun by our very first client. That SBA lending is going to be fun, but it's also going to be complicated, and you should prepare yourself for a marathon, not a sprint. There's going to be lots of changes, and you should stay on top of these changes, right? New SOP changed a million things, and because my software tries to encode absolutely everything, that changes all the things that we encode. So I would tell my my former version of myself to have patience with that, because in the beginning I wanted to build everything in 8 weeks, and now I know that some things are more of a long-term master plan where you have to like keep chugging away at it.
That guy got you. He tricked you. So this is essentially disrupting an industry, and it's the last industry I would want to disrupt. We do not want disruption. We want to just do the things we have always done and then retire in 5 years. So what's the hardest part about disrupting an industry, particularly an industry that's so sort of like holding on to the way things have always been done?
I don't think about myself disrupting SBA lending. I think of myself disrupting predatory online lenders by giving the weapons of modern technology to the SBA lenders to fight back. Because I think that the community banks, credit unions, over the last couple of decades have been losing ground in the digital realm to fintechs out of Silicon Valley that, with relatively little regard for whether their products, their financial products, were actually good, started just offering better customer experiences. And I want to make it possible for a community bank that has a lending team of 5 to have the same technology as a large bank and better technology than whatever small fintech in Silicon Valley wants to compete with them. Because I actually want the community banks of America to thrive in a world where their technology right now on average is 15 to 30 years old. I want to give them the newest, the coolest stuff.
Right. That makes sense. I mean, I get that, because you're kind of thinking a lot bigger than this is SBA industry is to me everything. So it's what I eat, sleep, and breathe. So as I view it, you're disrupting our industry, because if you come in and some big players sign on and start basically having this rocket fuel and we're starting to get left in the dust, I'm going to say that's disruption. So as you're coming into this industry, then what are the challenges that you're facing selling software to our industry?
Yeah, that's a good question. I mean, if folks have been doing their job on pen and paper or in Word and Excel for a long, long time, then change is always difficult. And so you have to realize that part of your job is not just to build the software, but it's to take people along for the journey and to build software in a way where it's easy for people to interact with it, make it incredibly intuitive. And I think part of our mission is to make banking software easier to use, more like the consumer software that you and I are used to in our private life, rather than the complicated enterprise software that takes like a huge handbook and dozens of academy trainings in order to use. So part of it is to make it easier. And part of it is to have a team that's incredibly empathetic, to sit down with lenders that previously have been taking notes in their Apple Notes on their smartphone, and then have kind of tried to navigate the way between their manager wanting it to be in a CRM and someone else wanting it to be in the loan file and the credit memo, and try to build a tool that does all of that for them and then take them along for the journey.
Yeah.
So that's a difference. I want to be clear though. I'm not building software just for the top SBA lenders. We work with the top SBA lenders, but I want to build software for any community bank. I want to build software for all of the lenders. I want to make it possible for anyone to do an SBA loan much faster, much easier, with much lower cost.
I think it's going to take the leadership at the institutions to get their folks to buy into the software. How it's so new to us to even be looking at some of the software. And a lot of us have PTSD from trying to implement other softwares.
Yeah.
And so I think and we're skeptical by nature because we're lenders.
Fair enough.
So those, I'm giving you many challenges, many answers you could answer this with. But like, I want my team to be excited to say, hey, this is the future. And we actually are privileged to have this software that kind of does the heavy lifting for us. And now we're going to be able to focus on the parts of the job we really like. But like, if you don't proactively, kind of get the buy-in and explain it, then people are just going to start thinking like bad things. Like, I got to change. I got to do things differently.
Yeah.
And also, is this going to replace my job type of thing?
I totally get that. It does take leadership, and that's the responsibility of leaders to think about the future. And if you're realizing that your competitive edge might not just lie within processes that are written on paper and followed by people, but also in the technology that you give to your people in order to do 10 times more, then you need to take that responsibility seriously as the leader of a community bank and think about, where do we need to invest in order to stay competitive, become more competitive. So it does take management buy-in, it does take management initiative, and the most forward-looking banks are the ones that we are engaging with.
Right.
And there's always, in every industry, we are lenders. We look at a lot of businesses every day and we see how they are performing in their industries that are structurally in decline. And that's the industries that may end up on a block list for a lender. And we want those industries to see a change. We look at P&Ls of one used car dealership and another used car dealership, and we see the comparisons. And I would like to encourage every bank to look at their own balance sheet like that. And I would like to encourage them to look at their own efficiency like that and ask themselves, the same way I would give advice to a borrower to improve their business, I should give myself advice. And I should do a thorough audit of what are we doing that makes us more competitive in the long run, and what are the things, the strategies that are no longer working.
There's just so many different types of lenders within our ecosystem. Not everyone is out here trying to conquer the world. But I think like there's different shops that you can split into, fixed rate lenders and variable rate lenders, lenders that pay brokers, lenders that don't pay brokers, ones that are collateral focused, ones that are cash flow focused, and all of these different advantages and disadvantages of all these shops. But I think like going to the future, I think there's going to be shops leveraging AI and shops not leveraging AI. And I think that's going to be a clear dichotomy at some point very soon. So I think a lot of us do feel like, I don't want to miss out on this.
100%. I agree with you. There's going to be a spectrum, right? There are people that are going to lean into using AI responsibly to accelerate 1, 2, 3, 4, 5 things within their overall workflow. And they're going to start seeing massive returns. They are going to start pulling away from their competition.
Right.
And there are people that are going to be slightly more hesitant, but eventually also will embrace it over time. And like, there's still a place for very different strategies. Like, there's a lender that has many, many branches, and small business owners walk into the branch and say, I have been banking with your institution for the last 20 years. I'm looking to expand. My business is going well. I need some money to buy some new trucks and buy some inventory. That's a very different kind of customer with a pre-existing relationship, where the challenges lie probably in the fact that no one in the branch is a loan officer specialized on SBA lending, and you need to offer them a way to find themselves to an SBA loan, find themselves into underwriting, and the bank might already have a lot of the financial information, versus there's a completely different strategy of having BDOs that work with referral partners and brokers. And
that's true.
Many of those clients don't already bank with your institutions, and there the challenges lie in collecting financial data that your like primary bank would already have. So there are very different strategies.
That's a good point.
That's fine, but all of them need technology to make the origination process easier.
And I feel like we're at sort of the ground floor here with you, because you're fairly new to the game, and we're giving it all out here on the internet. So by the way, we'll leave an email in the description. So if anyone wants to reach out to your team for a demo, I think you guys are going to be flooded.
Always excited to have a conversation about SBA lending and see whether there's a chance to build something cool together.
As you're now working closely with SBA lenders, like, what are you noticing about the way we do business?
I think if I take like the outsider's perspective of looking at the industry, what I see is a large number of people who've been in the industry forever. That's surprising. That's not the case everywhere else, but I feel like there's just an element of specialization in SBA lending that's necessary to do a good job as an SBA lender because it's really complicated to understand it all. But that's also beneficial, and you almost, after a year and a half, feel like it's all a big family where everyone knows each other, and everyone's been around for a long, long time. And then you talk to one person at one bank, and they have worked previously with the other person that you're talking to at another bank, because all the SBA lenders have intersected at multiple points in their career. So there's a lot of people who have been around in the industry for a long time. I think it's also a lot of people that got into SBA lending with a mission focus because it's a government guaranteed program. And there are a couple of lenders that specialize in SBA lending, but there are also many, many lenders for whom this was just a relatively small department alongside all of the other things they did, with the goal of kind of expanding their credit policy through the government guarantee, saying, I wouldn't traditionally, as a conventional loan, do this deal, but maybe with the government guarantee of 75, 85, even 90% for some programs, I might take this bet and do something within my community that might pay out. And so I feel like there are more people that started in SBA lending with a clear focus on the mission of helping small businesses, where this direct contact to small businesses, it still counts. And even when you talk to the executives that oversee large SBA programs, it is out of a deep focus of mission to empower entrepreneurs. It is a love for the concept of entrepreneurship that maybe you won't find quite as much if you look at people that work with large corporates in lending, because then you're mostly interacting with managers, and it's no longer the thing where you talk to a person and it's their life, it's their livelihood, it is half of their family that somehow works in the business, and it's their community that sees them primarily as the person that runs this specific business. It's the baker in the village.
That's what gets us, all juiced up.
And,
I mean, it's fun.
And this is why I love this so much, because that's what my life is like right now. I'm an entrepreneur. My business is my life. My team members are my family and friends. Those are the people that I am around for 16 hours a day. We travel the country together to visit lots of the banks that we work with. And it feels like the folks in SBA lending, they also see me a little bit like the folks that they lend money to. It's just the spirit of the entrepreneur that gets celebrated.
No, it's great. It's people, when they get into SBA, they don't leave. I mean, it's too much fun. Every day is different, and you get to help true entrepreneurs that are doing great things for the country. So we share that. But what about just the way we work? Like, our industry was really sort of solidified in like the 90s and early 2000s. That's when this business model really became like a playbook, where it's like, got BDOs out hunting, and we got maybe a packager that helps package it up.
Mm-hmm.
And then you got an underwriter, and then you got a closer. You might have a processor in the background, but it's basically the assembly line method.
Yeah.
And now with AI, do you think that banks should be reimagining how they set up the sort of the personnel and the process within the institution?
Absolutely. The roles are going to change. They are not going to change overnight, but they are going to change. I think the role of people in SBA lending is on the front end to build trusted relationships, to interact with the customer, and on the back end of being a reviewer of the work that AI already did. But if you no longer spend your day typing things from a PDF into an Excel, now you have more time to be the reviewer and to analyze the work. If you spend less of your time typing up emails, you might have the ability to spend more of your time actually having a conversation with someone and counseling them on the different options that they have, being an advisor to your clients. If you think about a bank that has a business banking department where previously the majority of their time was spent just managing processes, now they can actually manage relationships. Rather than you spending your time taking notes after the call and putting them into a system, you can actually focus your time on interacting with the customer, knowing that AI will take notes for you in the background.
Do you think you'll need less people involved on one single transaction.
For sure. Yes, no doubt about it. You will be able to do 10 times as much with the same number of people.
Which is a better experience for, I think, the borrower.
Oh, yeah, for sure. Like if you have good lenders, they anyways want to project one voice to the customer. Because the customer, like as a small business owner applying for funding, I don't want to understand your organizational structure.
Right.
I just want to hear, am I approved and when do I get my money?
Yeah, exactly.
And if I have to talk to someone, I want to talk to my one guy. I want to have Ray's number saved in my phone, have a conversation with Ray, text back and forth with Ray, and I don't want Ray to introduce me to 15 other people.
Exactly. I mean, ideally, in a perfect world, that's what it would be, right? You're just dealing with one person and 100%. And I think that's where it's going to go. And I don't think many people are talking about that because the assembly line is what we have. But I feel like you can get the job done with like one or two people if you're leveraging powerful software like Casca, which is going to be disruptive to our industry.
I can make an example. If you right now have a team of people whose job it is to review the reviewers of something that was done manually, and we can all ask ourselves, is that what we do with our day? Well, if that thing wasn't done manually, but that thing was done algorithmically correctly, then there's two reviewers there that could instead be out there in the community building relationships with small business owners to increase the top of the funnel that we have. Or that's people that can work with existing small business banking clients and see whether based on the financials that we see in their bank account, they might be ready for a loan for some expansion. That is time that we can spend on the front end in helping bring more deal flow. That is time that we can spend on the back end in seeing an annual or quarterly review of financials after the loan was originated, not as a chore, not as a tick the box exercise, not as just pure risk management, but as an opportunity to help an entrepreneur do better. Because many entrepreneurs are excellent at their craft, but aren't particularly great at accounting and financial management. But that's what we're great at. That is a way to add value. That's a way to decrease default rates by doing it well and noticing problems before the individual notices it themselves, and potentially give advice on where they could go. Here's how you perform in comparison to other dentists in your area. Here are things that you might want to do differently. We can reimagine what banking can really do.
And that's going to be exciting for us as an industry to redevelop the playbook once we have this powerful software in our hands. I want to wrap up, Lukas, with sort of just your overarching approach on what it takes to ship amazing software, just high level.
High level, building software is craftsmanship, and it takes someone who deeply cares and has the ability to do it. And for us, what that means is we hire extraordinary engineers, and then we put them in touch with people that do the job every day. And that means that our engineers, they fly out sometimes in groups of 15 to a large lender, and then they split out like little SWAT teams into different departments. And then here's a team of 2 or 3 people that sit down with the closers for the day.
Wow.
And they think about the individual things they heard that day and how they could improve it. And then in the evening, we sit together and we plan out what we could do. And overnight, someone builds a first little prototype for it. And the next day, we drive back to the bank and we show the closers, here's what we heard yesterday, and here's how we think we could do it better. And then we get feedback. And sometimes the feedback is, oh my God, this makes no sense. You haven't fully understood it yet. And then we listen again. But more often than not, it is, oh my God, I didn't know that was possible. Actually, could you also do X? And then you do that for like 40 iterations over 40 days. And you've got an amazing piece of software that can make someone's life tremendously easier for the next decade.
Well, that's amazing, man. That's very exciting. Very proud of what you've built, and I wish you luck as you continue your journey.
Thank you. It's an exciting journey, and I'm excited to talk to more SBA lenders and see where we can help.
And I'm just so thankful for that equity stake you've gifted me.
All right, that's it for this week's episode. If you want more SBA content, you can sign up for our monthly newsletter and check out our sister shows, SBA Today and The BDO Show. We'll leave a link in the show notes. And don't forget to subscribe to this podcast so you never miss an episode of the Art of SBA Lending. Ta-ta.